Welcome everybody, happy Friday, welcome to the Closing Beat. I'm Dustin Tibbetts, financial advisor with Jazz Wealth Managers, and this is just our little stock market update. We just try to cover everything that we can for the day. Not a whole lot to cover for you today, but we're going to go through it step by step. Of course, if you have questions, happy to help along the way. You can see on the screen there, you've got the Dow down about 1%, you got the S&P down 1.3 or 1.75%, and the Nasdaq down 2% on the day, basically sort of reverting back and forth. I even made the joke in the title there, the market's acting like Plinko. You guys old enough to remember Plinko, right? Like the Price is Right show that everybody wants to play. I mean, like a dream of mine to play that game. You get you win the little pucks, and you go to the top of the thing and you drop it, and it bounces around and hopefully lands in the right slot. But ultimately, it's going down, right? So even though it's bouncing around everywhere, it's still going down, and that's basically what the markets have been doing all week. Now, for the week, the S&P, the Dow, the Nasdaq, and the Russell 2000 negative, right? Negative for the week. I think the S&P lost about 105 points, 107 points on the week, even though we had the nice bounce yesterday. The first 3 days of the week were all down as well. So we'll go over the charts and check that out. I always put the 5-minute chart down here if I have nothing else to offer you, just to show you what the markets did throughout the day. Sometimes that tells us stuff. On Fridays, it usually doesn't tell us a whole lot unless there's a lot of news. Today was not one of those days. There was very little in the way of news. Everybody basically decided, if you look over here, the first drop of the day, all those little ticks are 5-minute time periods. Basically, in the first few minutes of the day, everybody decided they wanted to take a little risk off going into the weekend, and the rest was all traders because the volume was very light on the moves up and down. And if you follow the S&P 500, there just wasn't a lot of juice there, either on the way up or on the way down. Fed speak today was that one of the Fed presidents said the market moving here in this volatility is actually very normal. Now, you would think, okay, well, thanks for telling us that. Like, we knew that. But the reason that they said that, and the reason why people or how people interpreted that, was that if the Fed thinks this is very normal, then they're not going to change their interest rate hike plans, right? So the actual statistics, or the odds of them raising rates in December when they meet again, is actually now close to 80%. So based on that comment alone, people are like, okay, the Fed's not going to stop raising rates. We'll see the one last rate hike before the end of the year. And they pretty much baked that in, just saying it's going to happen. So that's pretty much what happened on the early portion of the day. We'll go over to the charts here real quick, make sure I can, you guys can see, yeah, you're all good. So you can see that the S&P is on the screen. We officially broke through the uptrend this week. The sell-off has happened rather aggressively, and I always say if something's going to move against you, you want it to move like this, and that's just my assumption. You can look back at any other time when a stock or a market moves aggressively and rather sharply, it always recovers faster rather than just sit around near the lows and not do anything. So one could argue that this was a rather fast decline, and so in my opinion, you're going to find people that think that that's a value. Friday's not a good day to do that because nobody wants that exposure over the weekend of owning the markets or owning something and having something go wrong, especially with what's happened lately. And we saw that last Friday as well, as going into the latter part of the day. Now, if we look at the Nasdaq, it's the same picture, broke through the uptrend there, still floating around near the lows, and the Dow sort of holding up the best, although I believe the Dow lost the most on the week. No, I think it was the Russell 2000. Anyways, it doesn't matter. They're all down for the week. Like I said, acting like Plinko. If you drop the chip into that Plinko thing, it like bounces around and falls a little bit, bounces around, falls a little bit. It's sort of funny to watch. Well, not funny if you don't know what's going on there. Home building stocks, those stuck out to me a little bit today. Pulte Homes coming up off the lows there. Toll Brothers coming up off the lows. That whole bottom that we talked about last week, it looks like people are starting to try to buy that. The ETF for home builders tried to sell off early today. It did close lower on the day, but ultimately did mark a little bit of a low there. So that is pretty much thanks to those couple names reporting there. Consumer discretionary stocks, that will go down as your weakest or your biggest loser, your biggest sector loss of the day, about 3% on the day. Most of that's because of Amazon. So real quick, if you look at consumer discretionary stocks, you go, oh no, what happened? Is it everything as a whole, or was it just a couple names? And anytime we're in the middle of earnings season, I think it's got to be just a few names, right? It can't be that everything was moving in that direction. Well, if you look at the XLY, or the Consumer Discretionary ETF, 22% of that is actually Amazon. What happened to Amazon today? Well, if we dig in real deep here, we look at Amazon. It broke through the 200-day moving average. It ended up losing about 8% or $139 on the day. Whew. I mean, it sounds like a lot, but it's a $1,600 stock. So anyways, looking at consumer discretionary, a lot of that pressure came from Amazon, which is 22% of that sector ETF. Home Depot makes up, I believe, 10% of the rest of it, and they were pretty aggressive to the downside today too, down 4%. So you kind of look at those two and you go, well, there's 30% of the entire sector right there, so you can kind of understand why that was one of the worst performers on the day. Speaking of Amazon, so we talked about it yesterday when the earnings came out, but Amazon came out with earnings. They didn't raise their guidance going forward. They have some things that could be issues. I doubt they will be, but they wanted to leave themselves open to sort of surprise you next quarter. So they took the bullet this quarter. They're going to surprise you next quarter, in my opinion. We'll cover it when it happens. Look, they ship a lot of things on those Amazon Prime planes now. They're starting to do their own delivery and logistics services. If this holiday season goes well for them, that's going to be huge, right? Because it just means they can expand. They know what they're doing. They've got it figured out. And add to that they're going to be paying $15 an hour to whether it's full-time, part-time, seasonal, you name it. Their starting salaries actually, or starting wages are going to be at $15 an hour. So that's going to weigh on them a little bit, and investors are just pricing that forward. Snapchat, investors are not pricing anything forward. They're about sick of Snapchat. So the stock was down 10% today. They got a high cash burn, which just means they're burning through a lot of cash they don't have, which is other people's cash. And those other people are like, yo, quit burning through our cash, start making a profit. They've had to discount a lot of their ads, so the ads that you see on there, they've had to discount them to attract people to come over from Facebook and such. And also they doing something with these TV shows or whatever, like the dumbest thing you could possibly do. Read up on that if you're interested, what they're doing for production and how they're kind of paying for all of that. Just stupid. Get yourself straight first as a company. Impress some people. Share price goes higher. Then go ahead and expand and try to be like Netflix or whatever you're trying to do there. So I'm a little bit upset with them. I don't own the stock. I'll never own that stock. Intel up 3% on the day. They killed it, right? We covered it yesterday on the closing beat here. They beat estimates by about $1 billion, so very, very impressive. And the CEO said he expects next year to be a record year. That's good news if you're looking at the semiconductor sector. Every other semiconductor was basically lower on the day. AMD did actually come down to the 200-day moving average perfectly. So those of you that look at that line and you go, that line is nonsense, Dustin. It doesn't make any sense. Look at what happened today. Very, very interesting there. Facebook broke to new lows today. Did it close there? Yeah, it sure did. Down 3%, almost 4% on the day. They removed a bunch of Iranian pages and comments and things that were sort of anti-government and everything. They're taking this whole political thing really seriously. The question is, what's it gonna cost, right? So if you're playing the game show, hey, Facebook, they set up this war zone, right? They call it a war room with all kinds of extra people. I believe it was 200 people, 220 people. And they're gonna just sit around and look for people posting things that are fake news and sort of political and such. And they're gonna try to get rid of it, right? Well, they set this whole thing up and investors are like, okay, you're doing the right thing there, but are you looking after our dough? Because that's all an investor cares about, is the company doing everything possible to return value to a shareholder. And right now it seems like they're trying to return favors and image to Washington. So investors are kind of like, look, if you're going to be spending all this money, we may see that in the earnings report, going back to, you know what's going on with them. And so, people aren't too interested in owning the stock ahead of earnings because that could be a surprise in there. That's next week, by the way, earnings coming up there. Mattel closed a little lower on the day. They missed on earnings. They missed on revenue. Yeah, earnings they missed. U.S. sales came in higher, if that's something you want to get excited about, but Mattel, not so good there. Tesla, by the way, another positive day. It's just momentum. You know, sometimes we talk about traders playing momentum and everybody goes, well, you can't make money as a short-term trader. This is how you make money as a short-term trader. People that play momentum. Was there any real good news out of the stock today? No, not really. It just broke above a technical level. You got good news as sort of a tailwind there, and you got investors that are playing, or short-term traders playing that momentum. There was actually news of an FBI probe into how they report their Model 3 numbers. Tesla quickly released a statement to try to combat that, but that's not going to stop the FBI. So, hey, look, that's just momentum. Plain and simple, it will fade. If you're trading it, it is a trade, not an investment at the moment. That's just my opinion. Colgate Palmolive, they make toothpaste and things like that. I know them for their toothpaste. I actually like their toothpaste. So 6.5% lower on the day. Boy, this is a complicated one. If you want to geek out on some earnings and you want to try to understand how people make sense of numbers of companies, take a look at this one. They broke it down to Latin America, the currency issues that they're going to have, how that's going to affect their sales. I mean, it was like, you know, who learns this? What school teaches this? I mean, I learned by doing, but I could not even attempt to try to keep up with how this company reports their numbers. Fascinating. I mean, just fascinating. If you need something to help you fall asleep, or you're just having a hard time, you know, lately sleeping or whatever, oh man, really, really, I mean, I think it's cool, but yeah, it's just me. And then lastly, I wanted to include an oil stock in there. I just thought it was an interesting chart. If you're a technical trader and you're watching, I just thought that was rather interesting. Really sharp decline the other day, breaks through all support areas, all lows, it makes brand new lows, takes a day off and immediately reverses. That's a technical pattern. That's something that like schools actually teach this stuff, not like universities, but trading schools. And so to me, I was just scanning through every stock that was out there today, happened to take a look at that one, I thought, hey, all right, that's cool. I get it, it's earnings related, but if you're a technical trader, I don't know, maybe that's something you want to look at. All right, a couple other things. You got gold, a little bit higher on the day. Where is it? Where is my emerging markets? If you follow options, if you're an options trader, you want to look at EEM. There was a massive, massive bet made that EEM is going to be higher by the third week in November, I believe. Yeah, I think it was the third week in November. Huge bet, the equivalent of somebody buying 15 million shares, give or take a couple 100,000, right in that area. 15 million shares, essentially somebody decided to buy, all in one shot, by the way. They didn't think about it, they didn't try to hide it, sneak into it or anything, they just went, bam, this is what we want to do. So that came up on any option scanner today. If you're one of those people, you definitely noticed it. All right, retail stocks basically flat to finish out the week. Financial stocks sitting near the lows. They actually poked to new lows there, not a big deal. Consumer staples, actually a little weakness. REITs, big down day there, 2 1/3%. I've covered it all. Yeah, everything I wanted to cover anyways. Energy, we didn't do semiconductors. Oh yeah, we did. Yeah, poked to new lows there, still very much in a downtrend. And that's basically all I have for you. Oh, Larry Ellison, by the way. You know Larry Ellison, I hope, right? Or somebody you've read about, studied. You should, if you haven't. Very interesting story there. He was at a conference and sort of announced, if you will, like, oh, I didn't mean to, but I told everybody I'm a big shareholder in Tesla, and we're actually like really good friends with Elon Musk, and you know. But he was like, I don't know if I'm supposed to say that. Totally scripted. Like he meant to do it, but that was a little bit of a positive thing for Tesla. It didn't really affect the stock when it came out, but that could have been something that people were trading on that one as well. Gemmel, got a little something going on, man. Yeah, I'm pretty much going to be off to bed. No Friday parties for me here this week. Yeah, interesting week though. Very exciting. I do expect next week to continue to be exciting. You got Apple earnings, Facebook earnings, basically just insert name here earnings. A lot going on there. You know we're going to cover it. And so we'll go through that. What's the probability of win rate buy versus sell position? I read that usually buyers lose 80% of the time. Oh, in options. Depends on the strike price. If you buy an at-the-money strike price, if you buy an at-the-money call or put, then essentially you're doing the same thing as buying stock. So your probability is the same. If you were to buy an out-of-the-money call, you have less chance of making money than owning stock. You're better off just owning stock. So think of an out-of-the-money call as sort of a lottery ticket, really, depending on how far out you go. So you can actually tell on the platforms, any trading platform you use, you should be able to see your probabilities as you go higher. If you buy an in-the-money call, I don't know why you would do that, really. Some people do it. I'm not a big fan. You're paying more, basically, to have less, or the same odds as stock. But generally speaking, the seller of the out-of-the-money options, technically in the long run has the probabilities on their side. So if you're selling an out-of-the-money put, if you're selling an out-of-the-money call, a little more aggressive there, you technically have better odds than shorting or buying a stock without going into great detail, because I could talk about that for days. Days. I love talking about that stuff, but now's not the time. WhatsApp for next week. Yeah, you think that's going to hurt Facebook? The old WhatsApp in there? We'll see. We'll see. Hey, anyways, have a great rest of your week, guys. I have covered everything that I set out to cover. I hope you enjoy. If I helped you in some way, if you hit the subscribe button, I thank you guys so much for doing it. So many of you have done that. We have a little, like I said, I'm big on data, and a little graph there showing that a lot of people have done that for us. I really, really appreciate it. That's going to get us to these conferences next year, and then you can unsubscribe from there. But hopefully I've helped you. You enjoy watching, and I hope you have a great rest of your week and into the weekend. So we will see you next week.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.